When people talk about the market, they usually mean the S&P 500, a basket of 500 of America's biggest companies, spanning industries from tech and healthcare to energy and retail. It's a stock market index, a tool to measure how these giants are doing together, and it acts as a kind of financial pulse for the entire U.S. economy. When the S&P 500 rises, it means these companies are gaining value and investors are optimistic. It's a sign that businesses are thriving, jobs are being created, and innovation is happening. So why is 7,000 such a big deal? It's a psychological milestone, a bold round number that grabs attention and makes headlines across the world. Hitting 7,000 signals strong confidence in the economy and in American business. It's a moment that reflects years of growth, recovery, and resilience. It's not just a number, it means retirement accounts are growing and people feel wealthier. For millions of Americans, their 401ks and investments are directly tied to the S&P 500's performance. This optimism encourages spending, which fuels even more growth. A positive cycle that can boost everything from home sales to new business startups. Breaking through levels like 7,000 shows the market's resilience after challenges like recessions, global crises, or economic uncertainty. It's a win for anyone invested in the American economy, not just Wall Street pros. Everyday people, small business owners and retirees all benefit from a strong market. These milestones tell the story of where we are and hint at where we're headed, offering hope and excitement for the future. Right now, the bulls are running wild, and the energy on Wall Street is contagious. 2025 has been a blockbuster year for the market, with investors and analysts alike marveling at the strength and consistency of the rally. It's a year that's defied expectations and rewritten the playbook for what a bull market can look like. As of December 27th, the S&P 500 is up nearly 18%, and the Nasdaq has soared 22%. These are not just impressive numbers, they represent a surge in investor optimism and a renewed sense of confidence in the markets. This isn't a fluke, it's been a steady, broad-based rally, with the S&P 500 on track for its 8th straight month of gains. Month after month, the market has pushed higher, weathering global uncertainties and domestic challenges. That's the longest winning streak since 2017-2018, showing deep investor confidence. It's a testament to the market's ability to adapt and thrive, even as headlines shift and new risks emerge. Every dip has been met with buyers eager to jump in. The appetite for risk has returned and investors are no longer sitting on the sidelines, they're actively seeking opportunities. What's driving this? A resilient economy, strong corporate earnings, and cooling inflation. Companies are beating expectations, consumers are spending, and inflation is finally showing signs of easing, giving both businesses and households some breathing room. The Federal Reserve's shift to easing policies has been music to Wall Street's ears. Lower interest rates and a more dovish outlook have fueled hopes for continued growth and stability. On December 24th, the S&P 500 closed at a new record high, a true holiday gift for investors. The mood on Wall Street was jubilant, with many seeing this as a sign of more good things to come. This isn't just about a few stocks. Strength is showing up across many sectors. Technology, healthcare, energy, and more have all contributed to the rally, making it one of the most inclusive market surges in recent memory. The optimism is widespread, and investors are betting on the whole field, not just one horse. This broad participation is a healthy sign for the market's foundation. As we approach 7,000, it's clear 2025 has been a year for the history books. The milestones reached this year will be remembered for years to come. The market's resilience and momentum are undeniable. Investors, both big and small, are feeling the impact of this extraordinary run. The bulls are firmly in control, and as we close out the year, the sense of possibility and excitement for what's next is stronger than ever. The market is celebrating the end of painful rate hikes and looking ahead to more cuts. The Fed's every word moves markets. Investors dissect statements, press conferences, and especially meeting minutes for clues about future rate cuts. The big question now, how many more cuts, and how soon? The December meeting minutes, due next week, are crucial, especially since the last rate cut was a divided vote. These minutes will reveal how confident Fed officials are about the path ahead. If they sound optimistic, the market could surge. If divided, expect some caution. This is why Fed watching is a high-stakes game. Even during the holidays, all eyes are on the Fed's next move. Their decisions can move trillions in an instant. The upcoming minutes will set the tone for the new year. This is where the action is. Another big question: who will lead the Fed next? Jerome Powell's term as chair ends in May 2026, and Wall Street is already speculating. The president's nominee will shape interest rate policy for years. A dove, favoring low rates, would thrill markets. A hawk, quick to raise rates, could spook investors. The market craves predictability and hates uncertainty. For now, Powell is in charge, but as 2026 approaches, this will become front-page news. The nomination process and any hints from the White House could cause market ripples. It's a political decision with massive financial consequences. Investors need to stay alert for any developments. The game is always changing. Be ready for the next move. For years, tech stocks led the market, but now we're seeing a rotation. Since November, the S&P 500 tech sector has dipped, while financials, transports, healthcare, and small caps are rising. This isn't a sign of weakness, it's a healthy shift. Investors are moving into sectors with more reasonable valuations and betting on broad economic strength. Confidence in the economy means money is spreading out, not just hiding in tech. This broadening rally is a bullish sign. It shows the market strength isn't just about a few mega-cap names. When cyclical sectors like financials and transports do well, it signals real economic growth. These companies are the economy's backbone. Their success confirms the expansion is real. This rotation could be what pushes the S&P 500 to 7,000 and beyond. The rally now has depth and staying power. The team effort is driving the market higher. What are the pros saying? The mood is overwhelmingly bullish, and optimism is running high across the board. From trading floors to boardrooms, the consensus is clear. The market is in a strong uptrend, and few want to bet against it. Paul Nolte at Murphy & Sylvestre says the market's momentum is with the bulls. The path of least resistance is up. He points out that recent gains have been broad-based, with many sectors participating, which adds to the strength of the rally. There's so much optimism about rate cuts and cash waiting to buy any dip. Investors are eager, and every pullback is seen as a fresh opportunity rather than a warning sign. Bears just can't fight this trend. Every bit of good news adds fuel. Even when negative headlines appear, the market seems to shrug them off, focusing instead on the positives. Anthony Saglenbane at Ameriprise notes the rotation into new sectors shows confidence in the economy's strength. Investors aren't just chasing tech. They're spreading out, betting on a broad economic recovery. Earlier fears of recession have faded as the economy proved resilient. Strong job numbers and steady consumer spending have reassured many that the worst-case scenarios are off the table for now. Now, investors are confident enough to diversify, making the rally healthier. This willingness to branch out signals trust in the market's foundation and suggests the rally could have staying power. Michael Reynolds at Glen Mead says the Fed is the main focus. Everyone's trying to predict the next move. The central bank's signals are being watched more closely than ever, as investors look for clues about future policy. The consensus: the Fed has pivoted, the economy is strong, and momentum is up. This alignment between policy and market sentiment is rare, and it's fueling even more confidence. No one has a crystal ball, but when the experts agree, it's a good sign for the bulls. The sense of unity among analysts and strategists is hard to ignore. The pros are riding the trend, not fighting it. They're adapting quickly, staying nimble, and making the most of the current environment. Confidence is high on Wall Street, and for now, the bulls are firmly in control. Even in the year's final days, Wall Street is alert. The main event, the Fed's December meeting minutes, set for release Tuesday. Investors will scour them for clues about future rate cuts. Light holiday trading means fewer buyers and sellers, so expect extra volatility. Year-end window dressing by fund managers can also cause unusual moves. The week may be choppy, but the bigger picture is unchanged. The market is in a strong uptrend, knocking on the door of S&P 7,000. Sentiment is extremely positive. The bulls want to finish the year with a bang and carry momentum into 2026. It's an exciting finish to a spectacular year. As December 27th arrives, the market is telling a story of strength and optimism. The S&P 500 is on the verge of 7,000, a powerful symbol of a fantastic year. This rally is built on a strong economy, solid profits, and a major Fed policy shift. The move to rate cuts has fueled confidence and broadened the rally beyond tech. Experts agree the path of least resistance is higher, and the bulls are in charge. Of course, the market is always looking ahead. Fed minutes and the next chair are the big questions. But, for now, positives far outweigh the risks. As 2025 ends, the market is at record highs, optimism is strong, and the bulls are charging. The message: America's economy and companies are thriving. Investors hope this momentum carries into 2026, bringing new opportunities. It's been a tremendous year. Let's finish strong. Booyah!